Hey everybody, this is Jordan with Conquer Trading and Investing. I jumped on a little early here, just in anticipation and getting ready myself for the 2 o'clock FOMC rate decision. Real quick, I have the countdown clock right here. FX Street does provide some interesting information going up into the rate decision itself. I'm not expecting much to happen today. If you want to pull up in your charts, I'm going to be following this on the 1 minute chart of the Euro US dollar and using the true trend BTC. Now, this is not the normal true trend that we're normally using here. This is the 333 period on the 1 minute time frame. We'll get into that more as we go, but I just want you to have an idea of what you're looking at right now. Blue bus driver, absolutely. It's a funny thing. You know what? If you haven't, or if this is the first time you're joining us, and if you haven't watched any of our replays, because we live stream every morning at 9 o'clock in the morning Eastern time, there is a wealth of knowledge, and it's shared in a really, really good environment. I really suggest you check it out. But see what's going on today, and let me frame this for you. We have, and we're going to look at the calendar here. We have right now, we have the FOMC. Okay, we're going to get the rate statement in about 15 minutes. And you're going to see some type of market reaction, although I don't know how big it will be. Okay. And then for the next 20 minutes, we'll see that kind of play out, and then maybe price retrace a little bit, whatever that move was, as we get ready for the press conference. A half hour after the FOMC decision is the press conference. And here's where you might find a lot of volatility, market movement, especially during the question and answer portion. Again, we'll be walking ourselves through it together today. And, because during the question and answer, there's a chance that Powell slips up and says something that maybe he wasn't supposed to, or just some new information is dropped on the market. And at that point, the market could have some big reactions. And it's generally after this over, as soon as the mic is finished and as soon as the press conference ends, that you normally see price really trend through the close of New York and into Asia. So that's a really good portion to trade. And especially as a new trader, that's the portion you want to focus in on. It's the easiest to make money on. And then, tomorrow is a big day. We have the ECB meeting really early in the morning. We have the Swiss National Bank also meeting. And then we have in these parliamentary elections going on that are going to greatly affect the British pound. And then the biggest thing the market's focusing in on right now is what's going to happen with the trade deal as far as US and China. Is Donald Trump going to put on the tariffs December 15th? And this is, I think, where the market's focus is much more than today's rate decision. Nevertheless, if an opportunity presents itself, we're going to be there to take advantage of it. But going in, I'm cautious. And when I say I'm cautious, I mean, I don't know if there's going to be a move that really follows through that will be able to that will be tradable and worth our time and attention. I got out of my Euro US dollar trade that I was in overnight during London, and I'm still holding a piece of my Australian dollar, Canadian dollar trade. Gold is a little interesting, and I want to definitely see how this reacts. And again, here's the thing about gold is that it's got to be forward looking to what happens on Friday or this weekend as far as the tariffs are concerned. But as we get toward this resistance right here, if we bounce off this resistance to the downside, that's something that I'm interested in looking at, perhaps to the downside. Euro US dollar is also facing this resistance right here. So if we get a bounce into this during the next 45 minutes to hour, watch what happens, whether or not this breaks through to the upside and the bulls overtake this resistance level, or it's rejected to the downside. Now, normally I'm going to be here on the 1 minute during the FOMC, but I'm kind of looking at the higher time frames. only because I don't expect much of a reaction. So I'm going to be flip-flopping through. The last few FOMC meetings, there was nowhere else to be, just simply watching the 1 minute and trading the 1 minute. So let's just see what's going on. We have about 12 minutes left. And everything's muted around the opening going into the FOMC. Traders already have their positions. Everyone's is squared up and ready to go. So we'll talk ourselves through the release. Again, I don't expect much of a reaction. We'll see. But it's during the press conference that things could perhaps get a little bit more enjoyable for us. And at the conclusion of. Now, I've been waiting, and I'm still waiting to actually film during one of these live streams during the FOMC, my 1 minute scalping strategy. I'll get into it a little bit today if price starts picking up, but I do not. I'm leaning towards I'm not going to be trading unless the market shows me different. I have nice trades going on elsewhere, and I don't really foresee this being an opportune moment. I think it's going to be a non-event today, and I think it's really important as a trader that you're able to distinguish what is happening and trade within that environment. Right, and that goes for just a normal trading day as well. Is the market trending? Is the market ranging? Do we have any news events on the calendar coming up that would affect any trades I'm getting into? Should I avoid that? You don't want to get into a trade if you know that you got a central bank rate decision coming up the next day, right? You're not looking to take new trades on the pound. You got elections tomorrow, huge event. You're not looking to take trades on the Swiss franc. You got the Swiss National Bank meeting tomorrow. ECB, yeah, you could get in on the euro trades, but you want to be out before Asia today if you do. You got the ECB meeting in the morning. Yeah, I know. So I know a lot of you, including myself, have been looking forward to this. Again, I'm going into it with the preconceived notion that it's going to be a non-event. Hopefully not. We'll see. And Hinaro, I know, well, it seems to me that you have a very good skill set for being able to identify the current market condition. New Zealand dollar has been very bullish ever since their central bank went on hold. It definitely has a bullish bias here, but you see that you come into this resistance right here. Price is butting up against this resistance. If it gets through here, you got a little bit more ways to go. So it's rarely easy, right? So you have the FOMC to get out of the way first. Let's see if the dollar, does make a move one way or the other. And then you also have, of course, what we've been speaking about is the December 15th tariff trade line, which the New Zealand dollar is also affected, be so originally close to China. So it's strong right now. It doesn't look overbought to me. And it looks like if it could clear out this current bump it's against right now, if it breaks out here to new highs, that it's got some nice room to the upside. So you could, if you're not in this, wait for the breakout, wait for the entry CCI to come back down on the test of this broken resistance will be support, and then look to get in there. You don't want to be taking a blind long here because you're just you're actually at a resistance point. You haven't cleared it yet. It's light. It's not a strong one. This is stronger up here. This one up here is stronger, and this one up here is even stronger. So again, oh, this one I can confirm. That's entirely true. The armadillos, Saturday mornings, good stuff. 141. That seems kind of weak, but I was young, right? I think I recently threw, what was it, my first game, a 139 maybe, with a house ball in Mexico. Gold is interesting coming up here right now because gold is neither up nor down. Gold is in. You see it? You see this little bear flag? So most likely this is a continuation pattern for the downside. But if you get above this resistance line here at 1477, then it gets interesting looking to the upside. Of course, you have this still a little bit resistance right above there. So this area is foggy. I'm not going to even talk about it until we get to it. Once we get up here, we'll be looking to get long if it's possible. If we could clear over here, because then we have about $40 to the upside, $30 to the upside, $40 to the upside. It looks like a nice trade. But right now, I'm assuming things extend downwards. Again, what's going to happen with US China? What's going to happen with the tariffs on the 15th? That's what gold is going to respond to. You got the indices all trading at near all-time highs. Little funky. You can't really see it here. Let me just pull up. You see over here, you have, because the indices are all putting in the same patterns right now. You had this higher high, and then this big sell-off, and right now appears a lower high. You got to watch out for that. That looks like it could be a topping pattern. That's why it's circled. I'm not trading it. I'm just watching it. It's really tough going against the indices. The Fed is currently printing a ton of money. There's a lot of liquidity in the market. It doesn't really make sense to be shorting the indices. I just don't know if I want to go long here. I wouldn't want to take a long here. So close. Again, focus on the calendar and what's going on in front of us. What do we have? About 5 more minutes, 4 minutes. Focus on what's going on in the calendar. And the market is not so much focused today on the FOMC as the market is focused on what happens with the trade war. Does it get escalated? Are the tariffs going to increase on December 15th or not? That's the main driver of the market. That's the main focus, because ECB is on hold. FOMC is on hold. Outside of any surprises, like the Fed announcing actual QE4 today, I think that it's a non-event, and we need to really be forward-looking to Friday to see whether or not we hear any news before the close. And if we don't hear any news before the close, everyone's going to be really nervous. Everyone's going to think the tariffs are going on, and just be careful. About 3 more minutes here. So we're going to have some downtime in a little bit after the rate announcement, right? So we could look at US dollar, Canadian dollar, and we could look at the US dollar, Swiss franc. But we're about to get a little choppy in here in a couple of minutes. So US dollar, Swiss franc, we're in this range. We're just in this range sideways. I don't play ranges. I like to play things that are moving. If you're buying bottoms and selling tops here, but you have the you have the Swiss central bank meeting tomorrow. So you don't want to be trading the US dollar, Swiss franc today. We have to get into this. A lot has developed since this morning. We've sold off a lot. We'll check that out. We'll come back to it. Oh, and Angelo, New Zealand dollar, Swiss franc. We'll get into that in a little bit, as well as the US dollar, Canadian dollar. But we have just 2 minutes here, and I love to see how price. I don't watch the calendar for we know they're going to be on hold. I like to watch the charts at the time of release and see what price does and how it reacts. Again, I'm watching here the 1 minute chart of the Euro US dollar with the True 10 BTC pulled up. That's the 333 period. You could just find it by searching in indicators and strategies for the True Trend BTC. I don't suggest you trade anything right now. I'm going to talk you through how to trade the FOMC right now. I don't think that we're going to see enough market reaction here that it's going to become tradable for us. But the first thing that I do is I'm looking at a 1 minute chart of the Euro US dollar. When this is above the zero line, I'm buying off the 1 minute charts, very, very small positions. The longer it trends, the more that I'm buying. And same thing to the downside. Here we go. We have some insiders who already know what the release is going to be, making money right now. So right now, I guess what we need to be focused on is what the initial reaction is going to be of price. The first 20 minutes, that's going to be a tell. Then watch out. You're gonna see a pullback in price. Press conference will start. Price will be a bit jumpy, and then we're gonna find out where it's going during the question and answer. So you don't want to trade anything right now, and if you don't know what your trade going in, you don't want to trade anything. The idea is to make money. If you're going in blind, you're going to lose money, and that's not a good thing. So again, nothing is happening right now. You see price has moved all of 10 pips. Again, this is expected to be a non-event. If it's not, we'll get involved. But don't do anything yet at all. I mean, this is exactly as we thought what would happen. And again, nothing has happened at all as of yet. This is 10 pips on a FOMC rate decision. There's nothing new so far that the market is digesting. That could change. We're going to see what happens and talk ourselves through it. But right now, you want to be on the sidelines. You don't want to be in a position right now. Paul, good to see you. Glad you're able to make it in. Patience. The game is about patience. The game is not about just trading to be in a trade. That is called gambling, and you're going to lose. So there's, again, just for a little perspective, there's nothing happening yet. Okay. It's been 2 minutes since the rate decision. Price is not doing anything. It's moved in a 13 pip range here. All right. Don't get suckered in one way or the other. There's absolutely no edge yet. And we'll see if that changes before the press conference or during. But right now, there is nothing to do and nothing is happening. And the quicker you're able to see and realize that, the better. Now we got actually phenomenal video here on BTC 2020 prediction price. I'll actually text it to you because it's a phenomenal video that you definitely should watch. And my prediction is that Bitcoin will be trading at $11,400 in May of 2020, going into the halving, and that 6,500 was the low. But it's an awesome video explaining exactly how, watching price come up right here, right now, watching exactly why I come to that conclusion using the previous two halving cycles, where at the day of the halving, price was exactly in the middle of the cycle high and low, which will have us at 11,400. Exactly. You got wrecked. This is exactly so far what we thought was going to happen, but just because we thought it's going to happen doesn't mean that's what will continue to happen. So just, you want to have an idea, but you got to be flexible, ready to change your mind depending on whatever is happening at any given moment. And again, too, we have the ECB tomorrow, and more importantly, we have the December 15th tariff deadlines. That's where the market's focused. We'll see. Just don't get suckered in right now. Nothing's happening. Same here. I mean, there's always the possibility, and Powell has worked really hard at not messing up and slipping up lately. He's going to be sticking to the script. No information is going to be shared, it looks like. And again, outside of which doesn't look like it's going to happen. I'm not saying, but outside of QE4 being announced, I don't see anything happening or changing. Again, the market has to be focused on the December 15th tariffs. Same thing, tomorrow's Christine Lagarde's first press conference as the head of the ECB. And, it's a question of whether or not she slips up or not. So you see, and honestly, a lot of traders over here bought right here as price made new high. Oh no, price is getting away from me. I need to FOMO into this right up here. And a lot of traders did. They bought. We're not doing anything. We're on the sidelines. There's nothing to do. So far, this is a non-event, right? Price is within these 13 pips, 15 pips, maybe it is now, right? Whatever it is, it's nothing. 15 pips on the Euro US dollar. Just hang out, watch. expect that we're not going to be trading this because it's a non-event. And if that changes, we're here to take advantage of it. And this is, you could see the characteristics is much different than the last few meetings, which were live meetings. And, you know, price was moving afterwards. Price is not moving yet. It's really important. And I don't see the New Zealand dollar really moving yet right now. And if it moves 5-10 pips, make sure your position sizes are the right size. This is the level here that looks really interesting. This support line. If we get below it, then it looks like, right? If we get below that support that we have in there at 97.21, that area, because you could just put a box down, you know, down to 97.10 too, if you want. But this area here, we get below there and things look like we're getting, until we get below there, though, I'm assuming we hold here, right? Or I can't imagine us getting below there before we find out what happens with China. But we'll see. I don't know. We're basically nowhere so far, about 8 minutes since the release. And again, so right now you have to expect that the market doesn't expect anything to change. It's waiting for the press conference, right? You can't be in a position long or short. There's no edge either way. You're in the middle of this 15 pip range, which is where the market started from. There's absolutely no edge here, and it's not telling us anything. And that's because the market doesn't have anything really new to digest. Good. You're always more in control the lower your position size is. That's for sure. And if you need to be trading correctly, and honestly, 1 micro lot is too much, be trading with a cent account. You could trade right off of TradingView with Oanda using their FX trade system. So even if no matter what you're trading, you could use insanely good money management. And our simple and profitable method that we share here is perfect for that. All right. So what is happening? We have about 20 minutes to go to the press conference. Price is not really doing anything yet. That could change really quickly. But right now, it's not telling us anything except that nothing is happening. This was our base case going in. This is exactly what we expected would be going on. So nothing is surprising right now. And we're just going to follow along and see what happens. You can see the overhead resistance on the Euro US dollar is about 10 pips up from where we are right now. We want to be aware of the major resistance levels. Yep. I agree. Right around there, right? So when we have our resistance levels and our support levels, they're not exact price points. That's the area you need to focus on, right? We traded that well. Even though price broke out above here and spiked, we weren't caught off guard. We didn't think that was a breakout. We were just waiting to see where price closed. All right, so we got, again, a little less than 20 minutes until the press conference begins. Being that price hasn't really picked a direction yet with any type of momentum, when we have that strong, or we have that solid resistance above us, don't expect much to happen going into the press conference. But we'll see what happens during the question and answer portion. That's when things could get really, really nice. Again, don't chase this. Price is not moving yet. All right. Price is not trending here. Price is not moving. But as always, and if this was moving, this would change really quick. If price started moving down, you'll see this turn negative to the downside. You don't want to also be trading opposite the direction of the true trend on the 1 minute ever. It's such a complicated beast, the US dollar. I saw Jeff was basically saying that although the US dollar should be weak, he expects, that it could remain strong for a while. And that's the case. So remove from the statement, this is interesting to know. In light of the implications of global developments for the economic outlook, as well as muted inflation pressures. We'll look at that later. All right, again, we have our resistance just overhead. Do not take this. If we clear the resistance to the upside, okay, then things get interesting for us on a pullback. Not right now. We got resistance overhead. It's actually a nice place even to look in about 5 minutes if you were in a long to look to lighten up right now or move your stop to break even. $50 minutes of pref conference. Now, I'd be seriously surprised if in the next 5 minutes we didn't see price retracing off of this resistance right here, because generally what always happens is 10 minutes before the press conference, price retraces the move. So this is what I'm outlining. This is what I expect is going to happen. In about within the next 5 minutes, you will see price start retracing backwards. You have that resistance right here that it's up against, as well as that's what normally generally happens 10 minutes before the press conference. So if that doesn't happen, then I'm going to say, hey, wait, maybe there's more to this move. And then maybe even think about starting to take some long side trades. But not yet. I do want to look for a link for the FOMC. Which should be shared in a minute. You do not want to watch it on Fox. We'll find it from being broadcast from the Federal Reserve themselves. Here we go. Price is at the upper range of that high rate over here. It is trading above that resistance. Is it going to hold before the press conference? If it does, then I think we have more upside here, or more possible upside. I expect within the next few minutes, and then for the next 13, that we see price retrace downward. We'll come back to that. Thanks, Yas. I'm going to wait until the press conference starts. And at that point, I'm going to turn the volume. I'm going to be listening to it. But it'll be like more or less background noise unless something comes up that we need to hear. And then I'll focus in on it and turn it up. It's basically going to sound like blah, 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 until we get to the question and answer point, right? And then that we want to listen there for any surprises. Nice bouncing. So what's our total range so far? From about 87, 97, 107, about 25 pips we've seen, maybe 28 pips we've seen. I mean, that's the tough part, is that we can't really trust any like the Federal Reserve has never been right in anything they've said or done, right? So, I mean, again, that article I shared earlier today, I don't know if anyone had a chance to read it. It was really good. It's in the replay from today's live session. But you know, the Fed could very well within the next 3 weeks restart QE4, and then they'll, you know, after lowering the dot plots today, they'll look really silly. But this is the Euro US dollar. And I don't think we're going to have any opportunity for trade. You have to look at that though, right? Like, so just step back a second. The 1 minute is not moving. Again, this 25 pip range. But if we clear above this resistance over here, right, and we get that close above here, again, do you take a trade today with the ECB tomorrow? You know, this is almost exactly what we thought was going to happen. Again, I said about 10 minutes before the press conference starts, you'll see price retracing, which it is doing now. And it's also being rejected by this resistance here. The question is, what happens now in the next 40 minutes? Is it able to gain this resistance level? Will price start taking off? Do I want to get involved in it if it does? Right? Adversely, what happens if it starts making new lows? If it starts making new lows from this 25 pip range that we've had in the past 22 minutes, and you see the true trend cross over to the downside, do I want to get involved to the downside? Maybe. Right now, price is not really moving. You know, and I need to be scalping on the 1 minute. You need some ranges to be in play, not 25 pip ranges. For about 7-8 minutes until the press conference starts. Good luck, Hanero. I'm pointing out that level. So this looks interesting too. This looks interesting. Australian dollar, US dollar. Again, we were aware of it this morning. We were looking as price was peaking up against this very light resistance here that we did not expect to hold. And now price is against some strong resistance over here. So what does the DXY look like? DXY is down here trading against the support. Everything looks pretty interesting right now. I expect all these levels are going to hold on the euro, on the DXY, on the Australian dollar, US dollar, unless they break. Then if they break, everything changes. But right now, this looks good. And this looks good, I'll tell you what, not to be playing right now. This looks good to see if you could get if this holds, if this resistance holds right here on the Australian dollar, US dollar, and I have a short entry during London, that I'm all over tonight. That is the trade that I'm focused in on. It's trading exactly according to plan. It's up now against this resistance, this upper channel resistance. And if it doesn't make any headway here, and it's possible to get in during London, I'm not going to take a rejection here now during this late in New York. You know, if it doesn't get away from me to the downside, but you know, I get a decent bar in Asia and then able to get short during London. This looks good if this resistance holds. Otherwise, we'll be looking at this later, probably not tomorrow. If it crosses to the upside, we're looking and we'll reevaluate. We'll be looking for a test of the broken resistance and then a resumption of price to the upside. Yeah, I do appreciate all the likes, all the love, and mostly because that really helps the YouTube algorithm know that this is something that they can share with more people. And I'm all about getting in front of helping other people, helping this channel grow. I appreciate that, and especially if you're learning something, you know. And so thank you. About a little over 5 minutes to the press conference starts. Remember, press conference starts. It would not be abnormal for I don't have in my gut that this resistance is going to be taken out. But at the start of this press conference, if we made a new high over here, if we make a new high over here, that's expected. I would not be surprised about that. And then it won't hold. Not until during the press conference, during the question and answer portion, and we have to see what happens. Right now, it looks like to me, if by the end of the press conference, when it's concluded, if the euro US dollar is trading above here, then there might be a possibility to get long for the rest of New York. Okay. That's something that I could foresee possibly shaping up and happening. There's a good chance we don't make the breakout over here, right? That this resistance holds up here. There's good possibility of that. The DXY would have to break down here, a pretty important level for us to see some follow through. And you see all the room to the downside. Like here's the first place you have to look for support, which is not that strong, and really down here. And it's the same thing on the euro US dollar. You have the first test right around here, but you have all the way up to here until it gets strong. So there's a lot of room to the upside if you get past that resistance over here. Gold, I'm interested in here. So for gold, I'm looking, the Australian dollar US dollar is at a nice level. Okay. You see it. It's at this double resistance, this sloping trend line, and this resistance right here. So this is a pair to focus in on. If it gets rejected here and short, it gets above here, we're going to all of a sudden be waiting for, you know, the entry CCI to pull back, this to reset, and look for longs. This looks like it's going to get rejected right now. Let's see. Gold, however, I'm going personally, looking for this to get up a little bit higher into this resistance area. And then if it's rejected, I like gold again. If this gets a little bit higher, gold here, and gets rejected during London, I like gold to the short side. Don't be surprised if I take that, if it happens. But I like the Australian dollar, US dollar right now. I like where it's trading at a pivotal point, and it's offering opportunity because I know when I'm wrong, right? If price were to get rejected here and I take a short, I know where I'm wrong. It's a really good risk to reward. I don't have to look to price comes down to this support area to see if I take profit or not. It's a really good risk reward going into the trade. All right, so we're getting close. We were a couple minutes away. I'm gonna turn this on low at first. I'll make sure it's. Are you guys even able to hear that music in the background? I want to have it so like you could barely hear this music coming out from the Fed here. And when they speak, so that we could hear them, but it's background noise. Unless he says something important, you know, we'll turn it up then. You should be able to hear that now. It's very low and light. Nice, Yaz. Thank you. All right. We pull back as we expected. What happens now? At the start of the press conference, I won't be surprised if we make a new high here. Don't bite. Don't take that yet. If you're playing this to the upside, that could easily, often you see
everyone.
Highs and lows taken out.
To begin, I'd like to say a few words about Paul Volcker, who, as you know, passed away earlier this week. Paul Volcker served as Federal Reserve Chair from 1979 to 1987. He accomplished many things during his long and distinguished career at the Fed and elsewhere. Of course, he's best known for leading the fight to tame the double-digit inflation that he inherited as chair, thus laying the foundation for the prosperity and price stability we enjoy today. But what is perhaps most admirable about him, more than his many accomplishments, was his character. He believed that there is no higher calling than public service, and he dedicated the lion's share of his life to it. With courage, integrity, and tenacity, he always pursued the policies that he believed would ultimately benefit all Americans. My colleagues and I continue to draw inspiration from his example. Turning to today's meeting, my colleagues and I decided to leave our policy rate unchanged after lowering it a total of 0.75 percentage point at the previous 3 meetings. As always, we base our decisions on judgment of how best to achieve the goals Congress has given us: maximum employment and price stability. Our economic outlook remains a favorable one, despite global developments and ongoing risks.
Not yet, Prince. We're at resistance, a double resistance here.
Monetary policy.
All right. I'm looking to see how price reacts around here. And I'm going to wait until London. Okay. If this does not break out during Asia, if this holds during London, if price makes a lower low than the previous 8-hour price bar, I will look to get short.
Rising incomes,
now's not the time to get short. Now's the time to be looking at this to see if you're going to get short.
And manufacturing output has declined over the past.
All right, like we said, we would not be surprised if we make a higher high. We haven't yet.
sluggish growth abroad,
but I'm
and
not
trade
biting
developments
there.
have been weighing on those sectors. Even so, the overall economy has been growing moderately. And with a strong household sector and supportive monetary and financial conditions, we expect moderate growth to continue. As seen from FOMC participants' most recent projections, the median expectation for real GDP growth slows slightly over the next few years, but remains near 2%. The unemployment rate has been near.
All right, like I said, this is going to be blah, 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 blah,
and the pace
which it is. The interesting part is going to be during the question and answer. And since the start of this, everything has happened exactly according to our base case scenario. There's no surprises here. It's exactly why we haven't traded anything yet. But interesting things are setting up. DXY is at support here. Euro US dollar is at resistance, and Australian dollar US dollar is at resistance here.
These developments underscore
keep an eye on gold.
The importance of sustaining the expansion so that the strong job market reaches more of those left behind. We expect the job market to remain strong.
Hey, Prince, welcome to the family. Thank you.
The employment rate remains below 4% over the next several years. Inflation continues to run below our symmetric 2% objective. Over the 12 months through October, total PCE inflation was 1.3%, and core inflation, which excludes volatile food and energy prices and is a better indicator of future inflation, was 1.6%. While low and stable inflation is certainly a good thing, inflation that runs persistently below our objective can lead to an unhealthy dynamic in which longer-term inflation expectations drift down, pulling actual inflation even lower.
All right.
In turn,
just like the market's on hold right now, we are too. We're on hold.
As a result,
waiting for the question and answer portion to begin.
The economy in a future downturn would be diminished, resulting in worse economic outcomes for American families and businesses. Against the backdrop of a strong economy, inflation will rise to 2%. Diminished, resulting in worse economic outcomes for American families and businesses. Against the backdrop of a strong economy, inflation will rise to 2%. The median of participants' projection rises. Inflation will rise to 2%. The businesses. Against the backdrop of a strong economy, inflation will rise to 2%.
I feel like I'm lagging behind now
participants
by a minute or whatever.
1.9% next year and 2% in 2021. We're strongly committed to achieving our symmetric 2% inflation goal. Over the course of the past year, our views about the path of interest rates that would best achieve our employment and inflation objectives changed significantly as the economy faced some important challenges from weaker global growth and trade developments. As the year progressed, we adjusted the stance of monetary policy to cushion the economy from these developments and to provide some insurance against the associated risks. In addition, inflation pressures were unexpectedly muted, strengthening the case for a more supportive stance of policy. Rather than modestly increasing the target rate for the federal funds rate this year, as seemed appropriate a year ago, we reduced it by 0.75 percentage point. This shift has helped support the economy and has kept the actions along with other information bearing on the outlook as we assess the appropriate path of the target range for the federal funds rate. Of course, if developments
I think we're caught up now. Thanks, Yes.
Reassessment of our outlook, we would respond accordingly. Policy is not on a preset course. Finally, I wanted to note that we've been purchasing Treasury bills and conducting repurchase operations consistent with the plan we announced in December. These technical operations are aimed at maintaining an ample level of reserves.
Again, this could put us in a good spot. If this holds, we're definitely going to be looking for price to be rejected off there and for the shorts. DXY is at an interesting level.
to address possible pressures in money markets.
And same thing with the euro.
We've been conducting term repo operations spanning year-end. We stand ready to adjust the details of our operations as appropriate to keep the federal funds rate in the target range. Thank you, and I'll be happy to take your questions.
All right, now we're starting the question and answer.
Howard Schneider with Reuters. Sorry about that. So I was struck by the sort of disconnect that exists here between.
Thanks for the thumbs down.
Unemployment and inflation.
This has been classic textbook. You could not get a better education anywhere else. Someone walking you through the FOMC. Everything that I said is our base case and is going to happen, has so far happened, and I have you on the sidelines where you belong.
What's happening there is the fact that the relationship between resource utilization or unemployment and inflation has just gotten weaker and weaker over the years. If you go back 50 years, you would have seen that when labor markets were tight and unemployment was low, inflation moved right up. And then as the Fed got control of inflation, the connection got weaker and weaker and weaker to the point where there's still a connection, but it's a very faint one. And what that suggests is that you would need to keep policy somewhat accommodative, and we believe that policy is somewhat.
It's like a 6 pip range over the last 20 minutes.
Policy to be in order to
not something you want to trade. We're looking for the resistance to hold. We're looking for support to hold.
It's faint and non-existent, though, it seems to me. So this suggests that really your policy lever, as it exists now, isn't really influencing prices at all. So in that case, what do you do to reach your target?
Yeah, no, I don't think that's right. I mean, again, the relationship between slack and the
Georgie, welcome.
Is weak.
Glad you're here with us.
The coefficient.
Thanks, Raj.
0.1. So it's much lower than it used to be, but I don't know that it's gone down any more in the last decade. It just is quite faint, but it's still there. I mean, you can see it if you look at where wages were 3 or 4 years ago. They were running around 2%, and now the whole group of different wage measures that we monitor has moved up to 3 and 3.5%. And that's
this is getting so far the resistance is holding, right? Don't get suckered in.
Much less true of inflation. The relationship between, in a way that,
and this is not a sell-off, right? Price is not selling off. You don't want to get short here yet either.
We do still see some.
Since price is not moving fast, go to the upper time frames.
Mr. Chairman, Steve Leisman.
There'll be time during London to get short here. This is going to get rejected.
Describe the rate cuts we just went through. And I'm wondering if we can sort of continue the analogy. Within 7 months of those 98 rate cuts, the Fed took them back and then some. So were those kind of?
This is similar to gold. You're at.
Or are we?
They're saying nonsense, so don't worry about it. But you see, this is at a resistance right here where my mouse is. You could see it horizontal. And price is being rejected by that. And then I also have this line drawing in over here. So for me, the sweet spot would be up in here, getting rejected. Like I have to look at gold, it's the same thing. Like you have the resistance here. We're a little below it. And is this the opportunity to get short? Maybe, but I pick my setups. And the Australian dollar, US dollar, that's coming and being rejected by resistance. So for me, rather than the metals right now, I like this setup. This has my eyes, right? And if it doesn't hold and is rejected, this looks good. The metals might lead to the downside, but you have to have a very small position side then because your stop needs to be far away. Your risk to reward is not the greatest. So I'm expecting that, until they break resistance, that they're going to follow through to the downside, but I'm not looking to enter them yet here. And they're very sensitive to what's going to happen on Friday.
And by the way, it's a good thing that I think we've learned that unemployment can remain at quite low levels for an extended period.
But if you're seeing price coming to resistance here and you're thinking, all right, maybe I want to look for a sell, you're seeing things correctly. That's for sure.
Some upward pressure on inflation to get back to 2%. Quite different in 95 and 98 when there were those two adjustments. So I would say similarities and differences.
Yeah, gold is kind of not moving right now. So you don't want to buy or sell gold.
I did the same thing as Howard. Michael McKee, Bloomberg Radio and Television. The BIS concluded in September that the repo spike was not a one-off confluence of random events.
So we're really focused on picking our setups, not over trading and taking good setups, which is how you make money. And for sure, by just trading to trade and taking too many trades, you're going to be losing money. So follow us, take a step back, pick the good trades and take those. We have the euro making a new high over here. This is interesting to watch now. DXY is testing down at support. So is the Australian dollar also taking out that resistance level? Not yet. All right, let's focus back in on the euro. Remember, she's got to close on the daily above the resistance in this area here for us to have taken it out.
Step back, and I will get to your specific questions on the year end and on T-bills. So I guess I want to start by stressing that these are very important operational matters, but that are not likely to have any macroeconomic implications. We decided back in January to remain ample reserve.
No, appreciate that. Thank you.
We'll be setting the federal funds rate, the range for the federal funds rate through our administered rates and not through active management of the level of reserves.
I definitely want, as we're breaking out here to new highs and above this resistance level, I want to watch what happens. So we're going to be flipping back and forth over here.
Ensure that our monetary policy decisions will be transmitted to the federal funds rate.
It's going to be really important to see at the end of the press conference if we're still above or below this level. All right, that's something that you want to be focused on.
So taking you back,
DXY is just simply testing that support right now.
We had very allowed the balance sheet to shrink. We slowed that gradual pace by half in March, and then we ended it in July.
The US dollar, Canadian dollar is going to require a little bit of actual look. So we're seeing this big sell-off today. We were up here earlier in the session in New York. We've really come off a lot. And now we're back down at this support area here. I have to be honest, I'm not sure what's going on here. So I can't look for a trade on it at this point.
So the question,
it's not clear. Like I see something clear on the Australian dollar, US dollar.
Very carefully looking at the reasons why
we have something clear on the euro, US dollar. This is down at a support level right now. You could see the support going back. It held here earlier Friday until Friday, and you got it over here. So you're at a support level here right now.
To go through it sort of like in time, we started off really on September 17th with overnight operations. By October 11th, we had created and put into effect a plan. That plan is in effect. It's working. I think.
And here you're at resistance also on the Canadian dollar, Japanese yen. You have to get above this resistance here to be looking to the long side, because as you get closer into this pattern, until you get a breakout,
temporary upward pressure,
you don't have much room to the upside or downside.
Unusual around year end. In both our repo operations.
All right, so you got to get above there before you start looking for longs. Because if you're taking a long here, your risk to reward was only 1-to-1.
We think that the pressures appear manageable, and we stand ready to adjust the details of our operations as necessary to keep the federal funds rate in the target range. Our strategy has
so it looks
essentially the key to our strategy.
We're at that pivotal level. Are we going to get the breakdown right here?
Through both overnight and term repo. And at the same time, we're raising the underlying level of reserves through bill purchases. I'll take that now. We've said bill purchases. We've also said that we were willing to adapt our strategy. We're not at this place, but if it does become appropriate for us to purchase other short-term coupon securities, then we would be prepared to do that if the need arises. So, but we're not in that place. It very much looks like the bills. Those bill purchases are going well, just according to expectations. I mean, the other thing I'll say is that we're in, very regular contact with market participants all the time. We'll be continuing that, and we're prepared to adjust our tactics. We're focused on year end as well, and prepared to adjust our operations as appropriate.
But we'll get into all that together as soon as the press conference ends and we figure out whether or
On
not
the standing repo facility,
this resistance is going to hold.
as you know, we've actually had a couple of meetings where we've discussed that.
That is a good place. I just took profits on the euro too. That's a good place to be looking to take profits now, and that's good trading. So I want to focus in on that.
I should also mention that after a year end, the sense of it is that
If we get a breakout here to the upside, right, rather than chasing this right now, I think it's better waiting
there will come a time when it will be appropriate for
and waiting, whether it's during London or New York tomorrow. Let's see what happens with the ECB ahead of us. I think it's better taking profits over here than chasing this to the long side right now.
Heather Long from the Washington Post.
So if this gets rejected, then I like it to the downside. If the Australian dollar, US dollar gets rejected, I like it to the downside. I'm not yet looking to take any of these to the upside. I'll wait for them to kind of level out, test their breakouts, and then if they resume up, then I'll get long them.
we think our policy rate is appropriate and will remain appropriate as long as incoming data are broadly in keeping with our outlook.
Yes, we have
And in order to move rates up, I would want to see inflation
more or less,
persistent.
right?
And that's significant. A significant move
Right
up in
around there.
inflation
That's
also persistent.
Where the next
before
spot, but I don't think
raising
whether it goes
rates.
straight up or down. I have no idea.
Concerns.
I don't think
That's my
so.
view.
I think right around here is at a resistance right now. Let's see what happens towards the end of this press conference.
We haven't tried to turn it into some sort of official forward guidance. It happens to be my view that that's what it would take to want to move interest rates up in order to deal with inflation.
Gina. With New York Times, just following up on Heather's question. So if you look at the SEP today, it looks like inflation is never overshooting 2% and is only getting up to 2% by the end of 2021, yet rates are increasing in 2021. So I guess how do we square that circle with interest rates increasing before inflation ever really moves up in some meaningful overshooting way?
So I think what you're seeing is
Prince,
got a
I'm
full
normally
year
taking swing
of
trades,
the median
doing
being
my
flat,
analysis
which is,
off the
I think,
daily
accommodative,
time frame,
modestly accommodative,
finding
inflation
out
not moving up very much,
my
as we've
levels,
discussed.
and then trading
that
off of
underscores,
the
I think,
8-hour
the
time
challenge
frame.
of getting inflation to move up. The committee has wanted
I trade off the
inflation
1
to be
minute
at 2%
during
at 2% for ever since
high impact
arrived
news events, such as
2012.
something like
And
this,
it
but the
doesn't
market's not
happen.
really
It's
moving
it's because there are disinflationary forces
with
around
such
the world,
speed
and
that I
they've
want
been
to be
stronger
involved in it
than
right now.
People understood them to be.
And I'm just on the sidelines.
In terms of those out-year rate increases, what you're looking at rate increases more than a year into the future, and people will have their own explanations for why they do that. But we really, none of us have much of a sense of what the economy will be like in 2021. So I think what may be behind some of that is just the thought that over time, it would be appropriate if you.
I'm
believe
waiting
that the
to
neutral
pick a
rate
level
is
here and go, hey,
2.5%,
thanks for
it would be
joining us. I
appropriate for
appreciate
your
it.
rates to move up in that direction. I will also say to you that a number of people wrote down, and you can't see this at this level of detail, but today.
See, gold is
but a
getting
number of people
interesting
did write
between
down,
here and here.
overshoots of inflation.
And
as
if
appropriate
this
po-
is
under appropriate
rejected in this
policy.
area, sometime, going into London, New York tomorrow,
really
I like it to the short side.
Given that inflation, whichever measure you choose, has either sort of remained where it is or not increased over the past year, as you've been dropping the policy rate, what is it that gives you confidence that the Fed has the tools to get inflation back up to target, or even
If you see the
overshoot,
breakout
as you just
continuing,
indicated that some people
Hanaro,
are considering
after the
doing?
conclusion of the press conference,
Well, it's just that there is
there's
still
a really strong
empirical
possibility
by
it's going to
many, many
continue
different,
through the end of the
by
session.
the work of many different analysts.
into
There is a
Asia.
relationship between resource utilization, by which I mean unemployment, and inflation. It's just relatively weak. And by the way, that's not a bad thing. That means that we can run at low levels of unemployment and have a historically good, in some dimensions, labor market without having to worry about inflation. It also means, though, that it's not easy to move inflation up. Now you say, why is there confidence? I mean, I would say there's more humility than there is confidence in this at this point. It's been very challenging. to get inflation to be at target. If you look around the world, the United
Okay,
States,
you have this chart in
all
better
major
than me.
economies,
December
has
12th.
been closest to it, but
to the
still
4th
hasn't
of
quite
December.
been able to achieve it. And I would also point out that this year, which has been a good year for the economy, core inflation is actually running at 1.6%, whereas it ran close to 2%
Beautiful.
most of last year.
Well,
so it's,
what about
it's a
this
real
one up
challenge.
here?
And but I think we're using our tools as best we can to meet that challenge.
There's just no symmetry. I like this one better, Paul.
Nick Timmeros, the Wall Street Journal. So, Chair Powell, I want to ask about the framework review, which obviously entails some kind of debate around.
And look, I had the touch here, touch here, touch here.
Target. And
it's,
in that,
it's a little squirrely down
context,
here.
it's merely saying
then when
that
it
you want
breaks,
inflation to
this
rise
held
above
as
2%, a
resistance.
sufficient strategy.
So, and I like
getting
the
inflation to
symmetry
stay at the
between
target.
the upper and the
Or
lower channels.
Would it
That's
compel
why I have
some
it
kind
like
of
this.
policy action beyond deferring
Just
future
take note
rate
of that, Paul.
increases
Whether
to
it's again,
achieve that
it's an
outcome,
art, not a
if
science.
that's the
But
direction in which the
that's
economy
what I
goes.
see.
In other words, it's one thing to accept inflation rising on its own opportunistically, but if inflation does not materialize, would a change in the framework necessarily make it easier to generate higher inflation?
Well, I think the answer to the question
Has
of whether
Australian dollar
saying
taken out
is
that
enough to create
resistance?
credibility, the answer to that is no. And
Looks like it.
I think you have to.
And again,
back
because you're
that
so
up with
overbought
policy that
here,
supports
I
the
wait for the
outcome. And that's what
pullback.
we're trying
Let's see
to
if it
do.
holds.
And so the
First of all,
changes that we're looking at to the framework
let's see if it holds.
are
And because
I think they
everything
take
on it's
all of that
so
on board,
overbought on
and
the breakout,
what they are
wait for the
designed to
retest.
do is
There's no rush.
to
Get the good trade.
strengthen the credibility of that inflation target, but only if followed by policy. Ultimately, it will take time to move inflation expectations up from where they are, which appears to be a bit below 2%. Will not happen overnight. It'll have to happen over time as credibility is built. The Fed has great inflation credibility, but inflation expectations are anchored at about their 25-year average, which is a few ticks below 2%.
We talked a lot about inflation. Edward Lawrence from Fox Business Network. We talked a lot about inflation. I want to ask you about uncertainty. With the House announcing that they will ratify USMCA and Canada and Mexico signing off on it, do you see that uncertainty easing now so the business investment could pick up? Or are the trade tensions with China just that big elephant in the room where you might not see those business investments pick up?
Well, I did see the news today that
This is important.
it appears there's an agreement to move forward to a vote on USMCA. And of course, it's not our role to comment on particular trade policies or criticize them one way or the other or evaluate them. I will say, though, that getting, if the deal were to be enacted, then it would certainly remove some of the trade policy uncertainty. And that would be, I believe, a positive for the economy. And I'll say the same thing about the negotiations with China, which haven't reached that point yet. We've been hearing from our people that we talk to, the many people and businesses that we talk to through the reserve banks that wind up being written up in the beige book, and they've been telling us all year, for a year and a half really, that trade policy uncertainty is weighing on the outlook. And I do think that again, without commenting in any way on the process or the content of the agreement, I think that removal of uncertainty around that would be a positive for the economy as well.
One uncertainty bigger than the other is, do you see, not commenting on the deals themselves, is one uncertainty?
Well, I think you can, I think you can see that what's been moving, one way to look at it is what's been moving financial markets. It's been news about the negotiations with China, not so much USMCA. I think that the difference between NAFTA and USMCA is smaller than the difference between current arrangements with China and what's being negotiated.
That's good. So I have to admit, sometimes your preconceived notions could get in the way. And
review this year has largely been
looking back, I feel, had I just stuck to my scalping game plan, it would have been obviously a tremendous session. But I didn't see it, and it's better if you don't know and not see it to not be in it, right? So I'm fine with taking the gains that I had from the trades overnight on the Australian dollar, Canadian dollar, and walking away with money today. But at the same time, I have to learn from my mistake, right? And I'm going to review this. And I'm not looking to chase anything right now. But I am realizing that there was more money for me to take than I took.
You're right, though. We talked here a lot about inflation.
And I'm not going to go ahead and chase any of these things. Let's see what happens. There's still a chance that they don't hold. I'm not chasing things up here. I'm going to wait out and I'll get the good trade.
Broadly among economists.
But it doesn't mean that I played it perfect.
That the connection that we can sustain much lower levels of unemployment than had been thought. And as I mentioned, that's a good thing, because that means we don't have to worry so much about inflation. And you see the benefits of that in today's labor market. The Fed Listens event are about inflation to a much lesser extent than they are about.
It's tough with the ECB just hours away.
The discussion, we always focus on inflation as well, but the discussion is really around what's happening.
But is it going to drop another,
and among small businesses, and I think
20 pips and get below that resistance?
We were already
before the ECB. I don't know.
Extensive outreach to community groups and such, but it was helpful to get it in the context of a monetary policy review. And I think that the fact that these communities have such high levels of unemployment and low levels of labor force participation tells you that there is slack out there. And I think that does also inform our understanding of what we mean by maximum employment. And it's been a very positive. I would say that the Fed Listens events have been extraordinarily positive, and they're certainly something we'll repeat.
The whole thing is the market's always going to be there. There's just a better trade around the corner.
Are taking all kinds of measures to look through things on people's resume that would have perhaps disqualified them in other kinds of environments. Training is moving up. You hear just a lot. There are a lot of things going on.
And it's incredibly important to learn from your mistakes. And your mistake could be making money on the day, right? But
chances, which is a great thing.
You have to review all trades, especially the trades that you left behind.
Sorry, if I could just follow up briefly. Is there any way to sort of systematize these insights, do you think? In terms of, we talk a lot about, for example, makeup strategies on the inflation side. Is there anything similar you could do on the employment side?
I think we have kind of internalized, and this isn't news for today. This is something we've been saying for several years. You've seen us moving down our estimates of maximum employment. In fact, it's already understood, I think, that there's more. Even though we're at 3.5% unemployment, there's actually more slack out there, in a sense, and the risks of using accommodative monetary policy, our tool, to explore that, are relatively low. I think we know that, and I think the review certainly underscores that. But that's a very important insight.
Hi, Victoria Guido with Politico. I wanted to ask more about the repo issues and what you all are doing beyond open market operations. Are you currently, for example, telling examiners not to prefer reserves over treasuries? For supervisory purposes? Are you talking to the Treasury Department about maybe reducing the level of volatility in their account at the Fed? And on the standing repo facility, is it that you would be inclined to do it, but you need to figure out the details, or what would kind of drive the decision on whether or not to do that?
So on treasuries versus reserves, we've done a ton of work on that. We've talked to supervisors, and it's interesting. If you look at the banks, they're all over the place on the composition of their buffer. So you have a business model, and that business model suggests what your stress outflows will be, and that suggests what your buffer should be. And you see them making quite different choices. Some of them have lots of reserves and fewer treasuries, and then they change their mind and they switch. So it's not obvious that there's one thing happening there. Notwithstanding that, we've gone out to try to understand that, talking to supervisors. In terms of the TGA, we have not tried to pull the TGA into this yet. We've taken it as exogenous. I don't know that at some point we won't have those discussions, but Treasury, we want Treasury to be able to have the cash that it needs, and then we are essentially taking that as exogenous to our work. There may come a time when we talk about that, but we haven't done much of that. Standing repo facility. So your question on that is, what are we thinking about it? What are we? I think we are more focused, frankly, on the bill purchases the year end, and also the review of supervisory and regulatory issues that we're digging into. And because we think, you know, these are structural things, right? Where you could, without sacrificing safety and soundness, just allow the liquidity that is already there to flow more freely, perhaps by making fairly straightforward, non-controversial changes. And we think there is some of that. And so we're working hard and fast. But those are things, you know, if they take rule changes, it'll take, you know, a notice of public rulemaking, it'll take 3 months and things like that. Those things take time. These things that we're working on now, though, like, you know, going through year end with the overnight facilities and the bill purchases and the term repo, those are things that we have to do right now and are doing.
Hi, Chris Rugaber at Associated Press. I wanted to ask, the only change in the statement was a drop in the reference to uncertainties around the economy. You seem very confident that, or it implies there's a lot of confidence that those uncertainties have gone away. What caused you to make that change for this statement? What were you looking at that seemed to be so much lower?
We did actually, if you look at the statement, you'll notice that we did call out global developments and muted inflation pressures later in the statement. And why did we do that? You know, those are the things that we've been monitoring all year. We've put now in place policies that we think are appropriate to address those things. So we're not revisiting that, but those are just key things and they haven't gone away. Okay, so we thought it was appropriate to mention them there. Still subject to the idea that for us to change our stance, we would want to see a material reassessment of the outlook.
Well, just to follow real quick on the material reassessment.
Okay, so we thought it was appropriate to mention them. Okay, so we thought it was appropriate to mention them there. Still subject to the idea that for us to change our stance, we would want to see a material reassessment of the outlook.
Well, just to follow real quick on the material reassessment aspect, are you worried that has set too high a bar?
So we're waiting for the press conference to conclude, and we're waiting. The only opportunities that will then present themselves, if these levels don't hold, if the DXY regains the support over here, if the euro trades back down, then that might open up possibilities on the Australian dollar, US dollar, and it might open up the possibilities on gold. But I'm not going to chase anything to the upside today. Absolutely not.
We believe that monetary policy operates with long and variable lags, and that it'll take some time before the full effects of those actions are seen in the economy. So that'll take some time. So that's one reason to hold back and wait. And we think we took strong measures. In fact, if you look at more broadly at the Treasury yield curve, it has moved more than 75 basis points. So you've had quite a significant move in the direction of higher accommodation. In terms of what is material at the end of the day, I would just say whether or not a change in the outlook merits a policy response will be a collective judgment of the FOMC. There isn't any single factor that will determine our decisions. We'll look at a full range of data and other information bearing on the economic outlook.
I mean, right now the euro US dollar is in between this resistance level and what looks like this broken resistance, right? So this is now going to become support. I'll wait till after the close though. We're going to wait to see the close of New York before we see that has become support. And then now going into the ECB, you're just in no man's land. If you want to short, you're looking to short up over here into this resistance. Shorting it right here, you're at this
wouldn't be my response.
Really low resistance area. You're at a resistance level. It's small though. That seems very counter trend, even though you're selling something that's really overbought. It's not the way I do it. I take high probability setups, and price has not yet bounced off of any type of resistance, giving me an edge. So don't try to catch a falling knife.
It wasn't that. So we move.
Take the solid trades as they develop. Wait for them to develop. I guarantee you will see your account growing.
So there was no sense of it being restrictive. We took steps to make it less accommodative. And that seemed to be the right thing. It still seems to me to be the right thing in hindsight. The idea that we were trying to, slow the economy down, we were really just trying to get near neutral. And even with the last rate increase a year ago, we were still meaningfully below the median estimate on the committee of what the neutral rate was. So policy was always accommodative during the course of that year. I think what's happened is obviously the facts on the ground have changed. You saw the global economic slowdown begin in the middle of last year, gather force, and then continue to go on this year. So you've seen a continual weakening. Just look at the IMF's forecast of growth from the spring of 2018 and compare them to now.
So all in all, so far it's been about a 50-pip move, and that's enough, right?
Was just beginning in the middle of 18,
but,
and I think it has had. I think there'll be very, very wide range of estimates.
I didn't get it.
I think it's had a meaningful effect on output just through the uncertainty.
I'm watching these longer term levels though.
Through
DXY is breaking down as we speak.
It's not up to us to.
It's at a pretty critical point. So the close of this press conference, I think, is going to see some follow through, not reversal.
Chair Powell, Donna Borak with CNN. To follow up on Edward's trade question, could you talk about what you would imagine the economic effect would be if negotiations were trying?
You have the ECB tomorrow,
and how the Fed might be.
You have to start looking forward to that.
In that event.
I wouldn't want to speculate.
You are at a light resistance.
I would say,
if you just follow my mouse, where price is right now, you could see it over here. You can see this was support.
We try to look
it broke.
The volatility in trade news.
It's up a little bit higher, right? At like 11.49.
It's not the right tool to react in the very.
But it's light. And if you saw price bouncing off of there, resuming downward, then maybe you're going to get a test down here if this holds a support, if this is indeed broken resistance. But it's too fuzzy now. There's no good trade here right now, which is why you don't want to be taking a trade here now. If you get closer up here, closer up to anywhere above 1165 and 1180, and then price is rejected by that resistance up here, and you see price resume down. I look on the 8-hour during London, during New York, if price makes a lower low than the previous price bar, then price is being rejected and I'm in, and then you have your stop loss right above it. If you're wrong, you have down to where price is right now to look to move your stop to break even. You already have a risk to reward of one, favorable, whatever it might be. It's on your side, and you're looking all the way down here for a take profit. Right here, you're in no man's land. There's no trade right now, unless you were long, which we tried to get long down here. I was away with my wife. I didn't take the trade. Had I taken it, I would have exited it already over here the next day. I took a short this morning and off of this resistance, and I got out of it basically at break even.
Do you feel that it might be time to retire it or change it in some fashion?
I think properly understood, it can be useful, but that's been a challenge. I think properly understood to me means looking at what it is and not at what it isn't. What it is it's an expression of
the whole thing. Instead of trying to guess when this move is going to stop, don't do that.
About appropriate.
Wait for step back a second, because price is not really moving. Price is an uptrend, and it's 50 pips, and it's nice, and I didn't take it, and I missed it, but price is not moving, right? Price is not moving in an environment where I want to be scalping it. It's pretty slow.
The reality, which is
so I'm not about it, and that's why I'm not trading it. But instead of trying to pick the top here, that's how you're going to lose money. Don't try that. Wait till you get towards the next resistance level. And if it gets rejected, take it. Or wait till you come back down and test this broken, what looks like broken resistance. And if this held as support, when price resumes up, then you get in the trade long. That's a good trade. Right here is not a good trade.
Challenge. And so I do like to say, if you focus too much on the dots, you can miss the broader picture.
Greg Robb from MarketWatch. Chairman Powell, many people seem worried that the framework that you guys are working on is going to be, the results are going to be less rather than more. And people keep coming back and saying, asking why you took off like a 4% inflation rate off the table, even when it started. I mean, as you said, if going around the country for all the listen events, I don't think I heard anybody worry about a 4% inflation rate or think that higher inflation rate was going to be a problem. So where does that concern come from? Is it members of Congress that have said this?
4% sounds high to me.
So let me say we've been working on this all year, and we're just at the stage where we've had a really interesting discussion about the various tools that we have at the October meeting. At this meeting,
See, I have my gold right now at this resistance I had drawn in over here.
Different groups in the economy.
If price is rejected over here, right? And this for me, I don't trade Asia. If during London or New York, I make a lower low off of this resistance here than the previous 8-hour price bar, that gets attractive to me. I know where I'm wrong. I'm really wrong over here if I put in a small position about $10 above, but the entry will be a little lower. And then this looks like a bear flag. So if I get to move my stop to break even as we test the lower end of this, and then that gives me the opportunity either for a free trade, or if we break down, this becomes beautiful. So I'm watching gold right now. I'm not chasing any of the breakouts to the upside. I'm not chasing the euro US dollar right now. I'm waiting. I'll wait to the next resistance level. I'll wait to the support level over here. Then it'll get interesting for me. The Australian dollar US dollar is still interesting. I don't know if this is going to hold or not. I'm watching it. If this doesn't hold over here, if we're rejected, it becomes interesting for me.
What would be the effect of that? I mean, where's the credibility in that, really? You haven't been able to get it to 2. So I think you need to lower your sights a little bit. I also think is 4%, you have to ask the question, is that really, price stability? Is that really price stability? Is that within our legal mandate? I think it's a fair question. So, I think I'd like for this review to come out with a set of positive results, meaningful improvements. It doesn't mean it has to.
Each and every one of you who are taking the time to watch this right now, if there's one thing that I could really instill upon you, you will learn, it's really having patience. Having patience to find your setup, let your setup come to you, and take the nice ones. Because by taking fewer trades, by being selective, and taking the ones that really fit your wheelhouse, you are going to trade much more profitably. Over trading and taking trade ups, forcing setups, or just being like taking a trade to be in the market is an absolute disaster. You're going to lose money, and you're going to continue to lose money, and you're never going to make money. And the reason that I have the patience to pick my trades is because I know that's what makes me money.
Right now, and getting policy right, and thinking about next year, thinking about what's the economy going to be doing. I like where we are in policy. As I mentioned, I think our policy stance is appropriate and likely.
Mark.
The outlook is broadly like this. I mean, it's too long of a question. I don't know how to get after that. There's a lot of learning that comes into from the economy every year, and in the way we do our jobs. And
greetings. So happy that you're here. Big up to Mongolia.
Whether it's the economy or how.
Mark, I'm glad you jumped in here. Yeah, I mean,
so,
but
I didn't obviously.
The thing is, I don't think it's going to become clear for a lot of you until those that make the conscious decision to pull back a little bit. And then when they start really, really picking the good setups and start making money, then it's going to become really easy not to take trades, to be in the market and to be impulsive. You'll stop doing it because you make money the other way. And once you're making money, it's not going to be a fight of the will anymore. It really would be so easy for you to have that skill set of patience and not chasing things and letting things come to you, or not feeling bad that I had the potential to scalp this today and I could have made money. I would have been trading with the trend and it would have worked out, but it wasn't the ideal situation. The market is not really moving as fast as I would like to be scalping. So I'm better off.
wages are growing more slowly now than they were toward the beginning of the year. Why is that?
Well, wage gains have moved up a bit.
Georgie, yeah, I have
3-4 years. You'll see
perfect video for you.
2%. Now you see them moving up, more 3.5%. So why aren't they growing higher at a faster rate? And it's a couple of things. I think there are a range of explanations. One would be that productivity has just been low. So wages should go up to cover inflation and productivity. Productivity has been low, and that is very likely to be holding back wages. I also think there are other possible potential explanations, such as globalization can be the idea that you can make manufacturing.
Georgie, that video is excellent. You'll really learn a lot. You'll really enjoy it, and it's fantastic information. It's really short, 10 minutes. It is. I highly recommend it. Go ahead and watch that video.
Another thing is, though, that the labor market may not be as tight as we had thought it was. I think there are many possible explanations. I will say, though, if you look for example, at non-supervisory employees in the labor report, their wages are going up at 3.7%, and so you do see, and wages are going up the most for people at the lower end of the. That's been true for the last couple of years, lower end of the wage spectrum. So you do see wages moving up. It's just they're not moving up at very high rates. And again, at the end of the day, that probably has most to do with
Hey, Canadian in the house. Yeah, it's Maria, absolutely, right? You'll see, and that's great. You haven't lost 6 weeks of work or anything like you've so quickly in the game in your trading career. To have this type of insight is going to get you exactly where you need to be quicker than anywhere else. And anyone who's putting in the effort, I'm willing to really go the extra mile and help and work with. And you'll see. You guys have seen, this is, I guess, about 6 weeks now that we've been live streaming. I take very few trades, and usually the ones I take, wind up being good ones. And the ones that I'm wrong, I get out of right away. It's no problem. But it's really about waiting for and picking your setups. And generally speaking, that shouldn't be more than 3 trades a week. The difficult part is that when trades occur, they come in waves. So you'll have setups on multiple pairs at the same time. And then you have to choose which one you're going to enter. But right now is not a time, in my opinion, to be looking to get into the market, especially in the euro-US dollar. You're in no man's land. The ECB is meeting tomorrow. But I do see lots of potential. I see on gold, I see during London tonight, if this is rejected, this resistance level right here, I will take a short trade. I see on the Australian dollar, US dollar, if this resistance doesn't hold, back under this trend line here is a good guide, because this resistance line here could be where it is. It could be right up there, right? More or less, but this might not hold either. If this gets rejected, I like a short off of there, because this is going back all the way to December of 2018, this trend line. So if it holds again, I like it. And if it's broken, we're going to start looking to the long side. Okay, that's great. There will be long opportunities. I'm not going to take it right here, right now. Wait a second. Wait for price to come back. Wait for it to test that breakout. Make sure it holds a support. See price come off it, and it's long. So there are setups developing. I don't need to chase the market here right now and be like, oh, look, the euro is trading up, so I need to be long the euro. No, I don't. I'm going to wait.
Brian Chung with Yahoo Finance. So before the July meeting, you said something kind of colorful. You said to call something hot, you would use the labor market. So expand a bit, I guess, on Nancy's question. It seems like the wage growth curve is moved pretty well explored already. But what would you need to see to call the labor market hot? Would it be a contractor, rather some sort of change in either the headline number of gains or the
Yep. If I could like a comment, I would definitely like that. The answer to that, first of all, on the higher time frames, this press conference is going on for seems like much longer than usual. On the higher time frames, you should be able to follow our replays from the live streams. And, you know, the first 20 minutes of the replays really go over all the current market, what's developing, the flow of the market. And that's all you need is 20 minutes a day and trading off of the higher time frames. You're not going to overtrade. And that's the first step into actually putting up a profit. So the first step is taking less trades and taking better trades that are offering you a good risk to reward, buying off of support and selling off of resistance, period.
Thanks.
That's the end of the press conference. That price is kind of stalled out. Yeah, I definitely know you trade off of definitely some shorter time frames. And yeah, that's less trade. I'm looking at about 3 trades a week personally. So my focus right now is not on the euro US dollar. I see myself at resistance here. You guys could see that resistance. You see this was resistance. It broke and was support, but it broke again. Over here, kind of held as resistance. It's not strong. It's light, but it's light where price is right now. I wouldn't even draw it in. Up a little higher, maybe at 1148. You could see it. Look to the left of my horizontal line, but it's not really in play. Price could peak out at there for sure. So right now you're looking to see if we close above this resistance line here, if we close above that line, and then if price comes down, right? You have the ECB tomorrow morning, big day. If price comes down and tests this and it holds as support and resumes back upwards, then longs are definitely in play, right? The trend has been positive now ever since the breakout of this trend line. This was held up into resistance, came back off our support over here, and is long. There's no way I would have been in this trade. I exited this trade. But now that we've taken out this resistance here, we're looking for this to come down and get an opportunity to test this support. And if it comes off, then I'm looking long. Otherwise, I'm looking for a price to come up and be rejected off of this resistance up here right now. So that's the game plan on the euro US dollar, waiting to see what happens here. On gold, looks like during London tonight, I might have a possible entry. That would mean that we're still relatively close. If we come down and wick down all the way down here, okay, then I'm just going to stand aside. I'm not going to follow. I'm not going to chase after price. But if we stay up in this area over here during Asia and then make a lower low during London, I'm in the trade 100%. If not, I'll reevaluate during New York with you. But I'm watching that like a hawk tonight. And then also here on the Australian dollar, US dollar, same thing. If we are rejected over here and stay somewhere around here throughout Asia and make a lower low during Asia, I'm going to take it. And the reason I'm taking it, it's against the true trend big time, but I'm taking it because of this trend channel, this trend line going all the way back to December of 18. So that's heavy resistance. I'll take a short off of it if it's rejected. So those are the two things I'm watching going into the next session. I just took my profits on Australian dollar Canadian. I took this overnight right over here during London, and I'm out of this trade now. I took it. I saw price was near this resistance right over there. And although initially I was looking down over here, I prefer right now with all that's going on in the next 24 hours to be on the sidelines. And because of the possible potential trades I will take on gold and Australian dollar to be focused, flat going into that. So that's where I'm at. Yep. Also, big deal. We have also the Swiss central bank has their monetary policy assessment, and then their press conference. Big deal for the Swiss franc. And also, as Maria just mentioned, we have the parliamentary elections. Enormous news for the pound. This should open up some possibilities going forward on the British pound. Maybe not until next week, though, for us, right? We're not going to chase something tomorrow. Be aware, stay away from the pound right now. Let this play out, and then we'll have opportunity to get into it. It's a busy calendar. Nevertheless, I'm still going to be watching the Australian dollar, US dollar if it doesn't hold this, and I'm going to be watching gold. And I'm leaning towards gold, not more than the Australian dollar, US dollar. You could see this resistance is intact and it's holding. We'll see. I hope to see you all tomorrow morning. I've been away for a few days, more than a few days, and I haven't even seen my little ones yet. I'm going to catch up with them right now. Everyone who hasn't, this is their first time spending some time with us, thank you. I'm glad you're here with us. If you haven't already subscribed to the channel, go ahead so you can spend some more time with us, and just have a wonderful day, everyone. Thanks a lot. Yeah, I'm not going to be live for the ECB, right? Let's see. I will be live actually tomorrow, Mark, for the press conference. Okay, I'll get on early tomorrow. I'll get on at 8:15 a.m. Eastern time tomorrow. So only those that are here now listening will know that. But that's okay. I'm going to be in front of the computer, and I'll go live early because that's a big deal. I want to see what's going on. I'm not going to be live here for the rate decision. I'm getting my oldest ready for school at that point, and that time's important for her. So I'll see you tomorrow morning at 8:15, by 8:15 in the morning to get ready for the ECB press conference. All right, everyone. See you tomorrow.